Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Monday, March 9th, 2026. So I'm showing you the SPY charts and IWM because our liquidity indicator here, it doesn't work on the S&P because it doesn't track the volume part of it. So I'm putting it on showing the spiders because this is really powerful. It's more of a confirmation to what we're looking at with the with our, the regular institutional pivot matrix, and as well as the signals, because what it is, it's telling you what's liquidity doing. And as you can see here, we have price moving down, and here you see we have liquidity moving up. So we got a liquidity divergence here, and here you can see our trading, the duration was down at the lows, and we got a buy signal on the spiders at 664. And you can see it's kept going all the way up until so what is it, 669? So about 5 points we made on that. And then like I said, right here, I wouldn't have taken these trades because, one, we have liquidity going down. So, and that's what these are. You can see right now it's heading down, and we're getting a bearish divergence here. So I took actually the short side and went from 671 all the way down to 668. So another 3 points. And then you can see here again where, like, before this move even happened, look at what happened. This was a buy signal. I meant a sell signal. I wasn't really getting into that one right there, just because you can see the green, the slower liquidity indicator. Well, it's on a buy right there. So you can see right here, liquidity went lower. And this is, the selling pressure just really picked up. So that's really the beauty of it. This is very powerful when you have, especially a divergence, and then we get the liquidity goes negative, and you get a sell signal. You can make some really good money on it. And here you can see we have a buy signal, and we have liquidity that was that's moving up with it. We didn't really have a divergence, but we got the buy signal there, and from here, once we got into the actual slower liquidity model that we have turned green on here. So it's green, meaning that there's institutions that are buying. And that was before this move even happened right here, this big short squeeze. So this would have been ignored on me. I wouldn't have taken this trade just because, again, we're on the buy right here. We are neutral with duration. So there was really no reason to take this sell right here. But the thing is that if you just looked at liquidity and it stayed green on it, I mean, this is when this triggered this buy signal here. But if you could have just sat there and went right when the liquidity turned green on it and rode this entire thing, rode this entire move up, because it was a massive short squeeze that I didn't have this indicator built beforehand. Otherwise, because I did try to short the IWM when we got this, but I'll show you why. But I got absolutely smoked on that part. Lucky the options were only 20 cents when I picked them up, so I didn't really lose anything. But in any case, we had this massive liquidity spike right here. And now what's going to happen if we see IWM starting to make highs up here, or making higher highs? We're going to have a pretty good big bearish divergence with liquidity. And if you look, whenever we see these, when we get these big bearish divergences right here, you can see the liquidity's heading down as IWM is heading higher. And that from there, we had this massive gap down. Now, we didn't have a trading signal on this until it already went down. But again, you can just look at when you get these divergences right here in liquidity, it's a great trade setup on it. So it's just a confirmation part of, what you can use with using our regular institutional accumulation and distribution zones. So that's it. Like I said, this trade was unbelievable. With the spiders on it, and then this right here. I mean, even I took this short here, and just from here, like I said, 671 down to 667. So it was or 668. So 3 points, and again, if you're trading the ES, that's 30 points. This was 50 points. I mean, that's how you do it. But if you just traded one contract, and again, looked at just either picked something that you wanted to follow with it, where you're only using buy signals when the liquidity is on a buy, and you're only using sell signals when liquidity is on a sell. And again, if you got this, I mean, you could see, I mean, just trading the liquidity part of it, besides the having our signals here, I mean, you caught a huge piece of this entire move right here. I mean, even from here, it's 667 up to the 669, but we came down and you can see liquidity was still on a buy until here. So, there's a number of ways you can use this. And again, I'm learning it a lot myself with it, but it's it's unbelievable how accurate this is, where, liquidity was moving down before this move even started. And it gave you the clue that we were going to get this big move down. So, that's it with IWM. And now, I'm sorry, that was spiders. Yeah. So let me go on another one with, this is a 5-minute chart on spiders. Again, let me do this. Hang on one second. Okay, so spiders, you can see we had the big drop, but notice what liquidity was doing. It was rising. Even though our slower indicator for liquidity was still in a red, you can see this buy-sell pressure and liquidity was heading higher. And again, if you just took this trade on the spiders at 665, you kind of rode it all the way up to the 671. This was the first time that we actually saw some selling pressure from that move. And then again, it nailed it here. You got one short here, but then it nailed it on this bar right here where we went across, and you can see liquidity went higher before we actually got this move. And that's really the way you can make these trades, because you're waiting for liquidity to be supportive on a signal, but waiting for these signals they're going to be a little bit more delayed than the actual liquidity indicator, but liquidity pressure. But anyway, so like I said, these are going to be separate standalone, the liquidity and the money flow, and that's all timed together. That's what these aqua bars are, and these purple bars. So the purple bar means as price is heading higher, more sales are going at the bid than they are the ask. And when we have it coming down and it's aqua, it means more buys are coming at the ask as price is moving down. So it gives you two different types of indicators with it. And like I said, they're unbelievable with it. And then you combine it with where your support and resistance are. It works out fantastic. So 15-minute chart, again, you can just see liquidity moving up. We got our buy signal, and we ran right into the secondary distribution zone, and we got a little bit of selling on it. But again, if it moves above it, then what we're going to be doing is simply moving it over, and we're going to draw our distribution line from our anchor here to the low there, which is 87 bars. So let's just move it. It's going to move that up a little bit for us. 80, let's put 90. That will be fine. And here we go. And here we go. You can see that now that moved up into the normal price zone where we are right now. And let's take a look. So you can see we made it right through it. This is our primary. This is our secondary. Liquid. We have supportive liquidity, and we're on a buy signal. So that's really the easy way to do this. With these charts is you're following all of them. So let's take a look at IWM. Again, you can see we had liquidity was moving up as price was falling, buy signal, and even if you just took this one here, 245.65 up to 248.80. So 3 points. These options are a lot cheaper. They're usually like 90 cents. So you bought 10 contracts for $900 or 5 for $450. You cashed them out for over $1,000. So it was a nice trade on that. But you can see we're getting onto a sell signal. This is a 3-minute. We have liquidity that was moving down as price was there. So seeing some backing and filling would actually make sense here. And I'd be looking for anywhere between the 250 down to the 248.33, and if it gets down to our secondary, then we're looking at the 246. So let me see, where am I going? Okay, so now we're looking at, this is our distribution zone. We can see this spike went right into it. That's when sellers stepped in. If it gets above it, then we're looking at 259.11, and this was the reason why we were buying today. Is you can see we had liquidity moving up, and again, this is on a daily chart. So anybody that's a longer term trader, this is what you want. You want to see liquidity moving up as price is going down. And look at all these things. Even though price was going down, there were more people that were buying at the ask than there were the bid, or sellers selling at the bid. And that's why we got these aqua candles here. So it just means that right now, even though price was moving down, there were buyers stepping in. And once we get into our primary accumulation zone, that's when they stepped in and hit it. But again, if they come down, then we're going to be looking at the 238.44. But I do believe that this is the low. So anyway, these indicators, you could use them with anything. I'm just going to throw in coin here. I know, because it's very volatile. And again, just taking a look at this, what we're looking at is you can see liquidity from here moving up, and then we got the buy signal on coin, and that was at 166, and it went all the way up to 215. So again, you do the math. You could do it on anything, any chart you want, and it's going to show you this stuff. So this thing is really, we're getting our landing pages done where this is going to be a separate piece of the software. But again, I'm including this in with the $299. I will have to email it to you separately because this is not part of that package. So if you guys are interested, once we get those landing pages done, we're going to have to move these on our own. So with that, have a great night, and I'll talk to you guys in a moment.